Good morning, everyone. This is Srikanth Rajan, and welcome back to the Stock Market Podcast from MPIinvest.com. So, talking about markets yesterday, absolutely bearish market. The market just fell the entire day right from the word go. In fact, till afternoon, at least the markets were kind of little stable. I thought it could be a sideways market, but then from there a fall. And the best part was it closed exactly where we had expected it, just about 19,700. So, yes, we had spoken about it last week, and yes, yesterday also I did speak about my view about the market. And yes, when views goes correct, we make money in the market. So that was a decent day. We made some decent profit in the market, and of course closed the week also with profits on the trading part. Now, leaving trading aside, let's talk about the markets. So if you see, of course, the expiry related volatility was huge, and the markets continue to fall. Yesterday the major fall came in from the banking sector, as the Nifty bank index actually fell post this 12 p.m. So that was kind of okay, because the markets are seeing some profit booking. And not only that, see, when very important thing that we need to look at is, at this point of time, there's a huge selling coming in from FIIs. So yesterday also the FIIs have sold for almost 3,000 crores, and naturally they have to sell. Like I've told you earlier also, the FIIs are short term investors. They want to pull out their money, and before any uncertainty comes, especially like the elections are coming in. And apart from that, if you see yesterday also, it was not a major sell off, or even it was a good buying by a DIS. They bought for almost 1,000 plus crores, but FIIs have been continuously selling. So whatever investments they have done, they are kind of booking partial profits at this point of time, and that is how they are. In fact, at this point of time, because the markets have actually rallied off enough. Also, if you remember, one more thing that you can look at is, in the last few weeks, they have not bought anything. The entire rise was probably more fueled by retailers, and retailers have a limit of how much the markets can rise up to, because retailers have limited fund. Unless more new retailers come into the market, it cannot actually lift up the market. So then what happens is, if when markets are at this high level, the FIIs also can't buy it, because they're already at a very high level. So they could be looking for an opportunity to bring it down. So that also could be a reason. So these are few things that could be expected. But however, this is an opportunity for them, or for everybody, to actually invest in the market, and on SIP mode. In fact, that's what I told yesterday also, and that's exactly what I believe. I look at this as opportunities for that. So now, where is the end of the fall is the question. Now, looking at the levels yesterday, I would say 19,700 was a very important support. So I would continue to watch it for today. If 19,700 is broken on the downside, then we could see the markets actually turning more bearish in the upcoming week. Or if it takes some support at this area and starts moving upwards, then we could expect some consolidation on the higher level. So this is the expectation for now at this point of time. And apart from that, if you look at what happened in the European and US market yesterday. So yesterday, the Bank of England has actually, Central Bank of England has actually decided not to hike anymore, and they've kept the interest rates fixed at 5.25% for now. That's a great news, because Europe was struggling with more inflation than the US. So that way, that is kind of a good sign. But apart from that, if you look at the US markets opened, and then continuously it fell. Majorly the Nasdaq, the tech sector fell. See, when the tech sector falls, one important thing to be looking at in the US is the bond market. So bond yields go up, and when the bond yields go up, then the tech stocks fall more. Reason, because the tech stocks move faster, they rise faster, and when they rise faster, people book profits also faster, and take those money and move it to the bonds. So when the bonds, okay, now this would be a good opportunity to tell you about why, when bond yields go up, people can go into bonds. Now let me tell you, let us consider this example. A bond is a paper that would give you a fixed return. Now it is like 6%, 7%, whatever be the bond. So when the bond yield increases, or the bond, what is bond yield increasing? So when the interest rate goes up, so for example, it goes up to 7%, I bought a bond for 7%. So now I'm locking my return of 7% for next 5 years, 10 years, whatever is the tenure of the bond. Now imagine after 2 months, the bond price, our rates go down to 5% or 6%. What happens? The next person who buys a new bond paper would get only 6% return on his investment. Now, in that case, I have an option. Since I know I have a premium bond which is giving 7% return, I can sell my bond over a premium to another buyer, so that that person can get 7% with my paper, and I can get some additional premium for selling my bond papers. So this is what is a bond yield. So even though the bond is 7%, I may get 8% return because of this additional premium which I take from the next buyer. So this is what happens. This is what is happening right now. So because people are expecting that yes, there's one more rate hike. So once the rate hike happens, there will be some period of flat without any changes in the rates, and then the rates may come down. So in that case, what happens is these people who are buying bonds at a higher rate can actually get a higher yield from the bonds. So that is what is happening at this point of time. So when you're getting 7 to 8% of fixed return, I'm repeating that, right? Then why would somebody go for a 12%, 13% risky return? So that is what happens at this point of time, and that is why bond yields are constantly watched in the US. So bond yields go stronger when there is a fear in the market, and also when there is also limited fund in the market. So these are things that's happening right now, and the way interest rates are going to be kept higher in the US. Of course, people are more concerned about what could happen to their EMIs and all those things. So again, all those fears kind of gripping the market again. Recession fears are again back on track. So with all this, US markets are falling down, but that's completely okay. That's how the markets are. If you are in the market, these are all opportunities to invest. So the key is simple: invest in a SIP mode. SIP does not mean just mutual funds. If you're investing into stocks also, you can do inch by inch. Don't go all investment at a time. Instead, go portion by portion, and that way we can actually take care of these things. So with that, I hope you understood the importance of bond yield and how it affects the market. So this is what is happening in the US. So with that, of course, naturally the Asian markets are also weak. But then, there could at times, since the markets have fallen so much, there could be a sudden pullback rally. So if you see last 2 days, markets have actually fallen really big. So today over the weekend, there might be some people who would square off their sell positions. So that could actually bring a upward movement probably at some part of the day. If the market kind of stays stable and or lower, by end of the day we might see a upwards rally because of the squaring of the positions. But apart from that, if you see the long positions of FIIs have actually reduced slightly, so they are not looking at much more long positions there. So that means probably markets can kind of take a break at this point of time. But then, like I said, will the market break down from here or will it reverse from here is the big question. So that needs to be watched. So we'll discuss more about it in detail on Sunday, the Market Pulse video. So that is where we discuss about what happened this week and what could be expected next week, sharp at 7 p.m. on Sunday. So see you then. This is Srikanth Ryan signing off. But before we leave, of course, wishing you a very happy weekend. Goodbye. And of course, do remember to press the like button and share the podcast. See you on Sunday.